Welcome to Every LA Talks with Los Angeles real estate agent Matthias Baker Mazzucci.
Welcome everybody to another video where we are going to discuss triple net. So if you're a landlord in Los Angeles, you need to listen to this. Today we're talking to Tyler, who is helping us break down what makes a good triple net investment. Now, if you missed any of the previous videos where we define what a triple net is, we talked about how to get into commercial real estate with baby steps, and we kind of lay the ground of how to do it. Now, we're going to talk about today's market. We're not just talking about underwriting tenants. We're talking about today's market, 2025, with the interest rates that we are seeing, hovering around 7% for a 30-year mortgage, high sixes for residential. So, Tyler, what makes a good triple net deal today?
In my opinion, when you're looking for a quote-unquote good triple net deal, you've got to focus on a few things. You've got to focus on, number one, location. Where am I buying? Number two, who is this tenant that is going to be paying me rent every month? Number three, the lease term. How much time do I have with this tenant on my lease? Those are the three boxes you got to check as soon as you start your search.
Okay, location. Location, though, well, let's talk about location. People always say, the cliche, there are three important things in real estate: location, location, location. But their commercial real estate and residential real estate have different location criteria. So if you're saying, I bought an amazing location, I bought a house right next to a Walmart, it's so great, I can walk across the street and go to Walmart. Okay. That may not be a good location. But if you're buying a single tenant restaurant across the street from a Walmart, you may be in good shape because you're getting a lot of traffic, et cetera, et cetera. So how do you evaluate location, especially because you sell in all 50 states? So chances are people do not know, what the best street in Knoxville to buy or, whatever. How do you help somebody that comes to you understand what is a good location?
Yeah, it's the perfect question. And to your point, these triple nets, for the most part, they're not going to be located in a neighborhood where you're going to want to live in. It's not where you're going to buy a single family home, right? That's not where Walmart does best. Walmart is not going to do best in Beverly Hills, but it might do amazing 5 miles down the road in an area that you wouldn't live in, but that's where business thrives. So what I'm looking for on a very high level when I'm looking to buy a triple net property or looking to help a client buy a triple net property is traffic counts. Number one, what kind of traffic counts is this street getting? Typically, if you're at 25,000 cars a day, you're in a good location and the business should be making money if that many cars are driving by. If you can be on a hard signalized corner with a traffic sign where cars are going to have time to stop and see your business, that is also very helpful. And check out the ingress and egress of the property. Is it easy for cars to pull into the parking lot? Or is there a median in the middle of the intersection that is going to make it very hard for cars to make a right turn into your business? It's the things you don't think about, but it's very simple. How easy is it for people to see my business and to get in and buy product for my business? Because at the end of the day, if your tenant doesn't make money, you're going to be in a tough spot as a landlord collecting rent checks every month. But
that makes perfect sense.
If you position yourself well, you're going to have cars coming in and out, and your tenant's going to thrive, and they're going to stay there forever, which is what you want.
Very nice. Let me ask you a question. When we underwrite multifamily deal all over the country, like whenever somebody's looking to buy in the, for instance, more landlord-friendly state, we look at things like, look at college towns, look at this, demographics, Tesla is opening a factory over here, so chances are they're going to need housing, et cetera, et cetera. Do you do something similar when looking at triple nets? I mean, high growth areas or, areas that are, because I'm assuming that you can have all the perfect ingredients, but if you're buying it in the middle of rural Kansas, chances are that your store can only serve however many people are in that 30-mile radius. I don't remember what they say large anchor, Home Depot has like a 40-mile radius or whatever. I can't remember, but you know what I'm talking about, right?
Absolutely.
So you also look at the area, the city, the neighborhood, the region, right? When looking at triple nets?
We are. Typically, the metrics we'll use is the 1 mile radius from the location, the 3-mile radius and the 5-mile radius. Okay. And you're seeing, hey, is that population going up? Has it been going up for the last 5 years?
Right.
What's it projected to do for the next 5 years? Is the median household income, where is that? Is it below market, at market, above market? Is it going up? Is it going down? Are people entering the city, or are people leaving? Is the population going down? Those are the kind of things we look at. And on a much more specific level, we're using our tools here to see what kind of developments are happening in this area. You know, there's a good chance if there's a developer building a Whole Foods or a Walmart down the street or a McDonald's, that's a good area that you're going to want to be in, because those companies like that do so much research and have so many statistics and metrics before they go into a market that you want to follow companies like that.
I like that. You know, in fact, we've talked about in other series in this type of videos in Every LA Talks, we talk about the fact that you get to, you know, spy on institutional investors and see what their moves are, where they're moving their money, and you know, you can take inspiration from that for you know, and see like exactly some areas that may be worth looking at. So that's very nice. I'm glad you brought that up. Let's talk about the returns now. We are in a, you know, we're no longer in a low interest rate environment. You know, now 30-year treasuries have a better return they did in 21 and 22. So, you know, a triple net has to compete with the safest form of investment. Are people becoming pickier when it comes to cap rates? Are they saying, look, I could get, you know, X in treasury, I'm not going to spend my money. I know there are different asset classes, obviously, and different benefits, but, you know, the opportunity cost is a real thing. How has that impacted you, you know, between, you know, 21, 22, when interest rates were inexistent, to now when we're seeing, you know, interest rates that are starting to return? What has that done for your business?
Yeah, it has completely changed cap rates on the commercial side. Right. So if you rewind a couple of years back to 2020 and 2021 and 2022, when interest rates were non-existent, right? You can borrow at 2-3%, and you can buy a property that's offering a 4 cap, and it makes sense. Yeah. Nowadays, that's changed. You know, you've got, for commercial on these single tenant properties, your interest rates low to mid 6% for the most part for a 25-year AM, and the cap rates have followed. Cap rates have slowly crept up and up and up. So now you can buy product for a 6 cap, a 6.5 cap, a 7% return in good markets. Now, there's always outliers. You have your core tenants with the best credit, like your McDonald's, Chick-fil-A, Target, Home Depot. Those cap rates are going to be much lower because they're recession resistant. There's always buyers for them that want to hold them for the next 50, 100 years. And they don't care that their return is very low right now. It's going to be something that they pass down to their family for generations. But if you want to make money today in triple nets with interest rates being where they are, you can, as long as you buy the right product with the right cap rate.
You know, I'm glad you brought this up, and this is actually something that we haven't talked about in this series, but it's something that is very true and important for the Every LA Talks. We talk about legacy. We talk about, you know, like when you do your estate planning, you know, what are you going to leave your beneficiaries, your family? And as you said, you know, high quality assets that are recession proof should be part of your estate plan if you have the type of liquidity or the type of real estate assets that calls for, you know, expanding into commercial real estate. So thank you for bringing that up, which reminded me to do this little segue. So thank you everybody for joining us in this video. If you haven't done already, please like and subscribe for real advice from real estate professional. And if you're thinking about buying or selling in LA, we are just a call away. All right, we'll see you in the next video.
Thank you for watching. To find out more, visit everyla.com.